Back domestically, I think the healthcare debate has helped raise awareness of this more than anything else lately, and that is that we deficit spend as a nation, and we have a whole lot of national debt as well, too. Those have to be two things that concern you and other members of the Fed. I mean, do you see us being able to dig ourselves out of trillions of dollars of debt and to continue with trillions of dollars of deficit spending? I mean, at some point in time, where do we hit the breaking point?
Well, we are running very large deficits, and we're running our debt to GDP ratio up to very high levels. It wasn't that long ago we were running surpluses, and the debt to GDP ratio was going down. So it can be done.
Those were the good old days.
Yeah, it can be done. But no, we're concerned about it. And this combination of very big fiscal deficits and very easy monetary policy, even though I think the easy monetary policy is very appropriate right now, that kind of sounds like a mix that could provoke a lot of inflation going forward. And I think that has a lot of people in financial markets worried. And our job as the Fed is to make sure that we've got good strategies in place that can reassure markets that we don't plan to allow excessive inflation in the future.
A lot of business leaders that I speak with are obviously worried about inflation because so much has been pumped into the economy. Do you worry about that? What is the Fed's attitude in terms of watching and monitoring that?
Well, I'm an inflation hawk, and I do worry about inflation. So, but I do think we'll be able to manage this situation. It is an unprecedented policy. You're more than doubling the monetary base. That is not something that we've done in the post-war era in the U.S. or really any major industrialized country. And it's very reasonable to think that could be inflationary going forward. But hopefully we've got a package of policies in place, and we'll get some timing in place to be able to withdraw that liquidity at just the right rate so that we have a good recovery, but we don't get a lot of inflation.
One of the calls that has been made over the last year and throughout the year is the fact that there needed to be more regulation of the financial markets that would have maybe prevented some of these things from happening. Obviously, people are very concerned about over-regulation. So how do you guys kind of walk the tightrope on knowing, or I guess being aware that over-regulating can be as much of a problem as regulating can be? How does that conversation play out?
Well, I think that's a very good question, and any time you're trying to change the regulatory environment, you have to be very careful about it, and you have to really think about, well, what might the unintended consequences be? I think it's very natural to come out of a big crisis like this and just say, well, obviously we need to change and we need to do our regulation differently, which I think is true. But exactly how to do that and how to get it to come out in the right way so that you get the things to happen that you want to happen and you don't get unintended consequences, that's very difficult. So I think the best thing right now is probably to go slow and think carefully about how we want to go about regulatory reform and make sure that we've considered all the possibilities before we take any action. We do have a part of the regulatory structure that has actually worked quite well. The smaller bank regulation, small in this means less than $100 billion. So that's not that small. But that part of the regulatory structure, that actually works pretty well. You do have bank failures going on. You allow failure. You have deposit insurance. You have a regulatory structure. You monitor the banks. If someone's going to fail, you have the FDIC come in and handle the failure. That all works pretty well. It's really, the biggest problem is with these large financial institutions. How do you get a system that works like that for the small institutions? How do you get some system in place for the large institutions? And that's where we are. If we don't fix this too big to fail problem in America, it will plague us for decades.
Yeah. Why is that so troublesome to come up with a model that works like it does at the smaller level?
Well, for the bigger financial institutions, they may own a bank, but the bank might only be one kind of smaller part of a large global entity. So you've got the fact that it's not just a bank; it's a bank plus a lot of other things. That's one issue. Another issue is that they're global players. A large fraction of their business might be overseas. So you've got to have some international coordination of the regulatory process, either implicitly or explicitly, about how you're going to handle a potential failure of a firm of that size. And I think as a nation, we have just never faced up to this too big to fail problem. We have just hoped that these big firms would never get into trouble, and boy, did they get into trouble in the last year.
Yeah. I mean, can that work internationally? I mean, it seems like there would be so many complications politically as well as economically to structure something where there's that type of monitoring taking place.
It's tough going to get international coordination. As you know, I think Europe has worked for years to try to harmonize rules across countries on financial market regulation with sort of mixed success, and it's a tough road to hoe. You've got sovereign nations, and they've got different ideas and different political cross currents about how they want to handle financial market regulation, and you've got competition between countries. They would very much like to attract some of these players to come to their country, and so they might offer a regulatory environment that's a little bit different from the one that everyone else has. And so that part is a head scratcher about how to really make progress on that. But that's where we are, and that's the reality of the situation.
Leave me with this last message. Give me a message of hope. Give people some reason for optimism. We're going to recover, and we are going to do well in the future. I think our biggest challenges are that we've stemmed the panic in financial markets, but the financial intermediation sector is not really healthy yet. We've got a lot of government guarantees out there, and that has stopped people from worrying that everything was going to collapse. But on the other hand, these firms still have to get back to more normal lending and more normal behavior. So we're still a ways from that. But the economy will recover. It's a very resilient economy, and even a shock this big and even a panic this big will recover, and we'll do well in the future.